It is Monday, February 14th, and this is Morning Market Movers. Happy Valentine's Day, everyone, if you're out there celebrating Valentine's Day. This is Morning Market Movers, where we take a look at hot spots in the markets for today, and we do some live analysis for day trading. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. What are we looking at today? It is, I don't want to say it's an uneventful, quiet Monday. We've got oil moving around quite a bit, right? And a lot of what's going on right now in the markets, what people are looking at, there's two things. We've got inflation concerns, and then of course we've got geopolitical concerns in Europe. Those tensions are moving the markets. We're seeing equities. We saw European equities get hammered over the night last night, only to rebound when some slightly positive statements had come out, sounding like they're still trying to find diplomatic solutions to the situation with Russia and the Ukraine. But that is moving the markets. That's moving oil. That's moving equities. So we are going to take a peek at both of those. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, I'm just going to do a quick look at oil, just a very, very quick look. And you can see how, clearly Friday we were climbing up, and then last night oil took off, got up near $95 a barrel. In fact, I think it might have just, I don't know if it touched it. It just missed it.
Yeah, 13 cents.
It just missed it. Now, the Fibonacci levels that we actually had from last week, they're still in play here. This 50% level, we know that there were some sellers, so we would expect buyers to show back up if we slid back down to this 91, just around 91.70-ish level. But you could see oil is certainly volatile. Everyone's got their eyes on the Middle East. And then I mentioned that we've got inflation concerns, and that's Bullard is already out talking today. Brian will cover him, but he's going to officially be speaking at 11 a.m. Eastern. So be prepared for what he's going to throw at the markets as well. So with that, Brian, I'm going to flip it over to you. Let me switch screens, and we'll take a look at those two factors impacting oil and equities.
Yeah, right now you mentioned Bullard. I think he's the big one. He's made a couple different comments today, basically talking about how the last four CPI reports show inflation is broadening. And everybody's, again, we've heard Bostic and some of the other Fed chiefs out there mention it. Bullard came out last week with 100. He justifies it and says, the last four inflation reports are just, because of the broadening, it justifies the 100s by July, which means it's not 101. It's 100 in basically two opportunities. So 50-50. As since November, I've been saying the first one will be a 50. It looks like that's pretty much absorbed in now. He put it on Powell. He said, hey, listen, it's going to be up to Powell when we start the timing of this one. And then he says the Fed's credibility is on the line. Needs to react to it in a way that is not disruptive to the markets. And again, it's kind of, how do you get as much in as fast as possible? Because remember, the markets and the economy are different. He doesn't necessarily care as much about the markets, but there is kind of, and we need to front load more of the planned part of it. So that makes sense. It is important to defend the inflation rate target. Still expecting 3.5% to 4% GDP growth this year, even with all the interest rate rises, which is phenomenal. Balance sheet runoff is relatively cheap. Since the summer, I've been urging, to see me move faster. So, like I said, he's been really one of the driving forces on this one. It's gotten out of control to where we are now. So, 11 o'clock today, he is speaking, and he'll be doing, he's going to be conducting, he's discussing monetary policy in an interview conducted by CNBC. So, definitely be some inflammatory statements made there. And again, if they're not giving him the juicy statements, and again, initial release time was shifted on everything was early due to source rescheduling. Okay, so it looks like they've shifted some of the comments, but so this is kind of what we're seeing. It's actually they're talking right now. That's where all the data is coming from. These headlines are coming from. So that will kind of set us off for the morning. Like I said, none of these right now are overall positive comments. The 3.5 isn't bad, but as they continue to kind of roll through, we should see the indices. Yeah, they're picking up already. You should see them to continue to push lower.
And they were. We were slightly green, and now we're down a
Yeah.
quarter to 0.5%, as
Mhm.
his comments start in, the 100
Yeah,
basis
so
points. I mean, he's looking to. I mean, I think we know, and you and I were talking about this before. The In March next month, they're going to be doing a 50 basis point hike. That's already in the markets of giving it an 80% probability. If you take a look at, and so that's there now. He's calling for that other 0.5 basis point in June. So 250s back to back, which might be the right thing to do. We'll see how that comes.
and if it's not that, it'll be 25, and then it'll still be 0.75%.
Yeah,
You
right.
know, so
So he'll be close to the
it's
100 anyway, right? One way or the other.
right. Yeah,
Right.
so yeah, it's not. Yeah, but
Yeah.
and having your hand for so again, justifiably, all the indices are now red. But the one good thing is if this data comes out now, that means for the open, we're pretty much clear for the rest of the day. There's no major shockers in there besides the Ukraine situation. From Friday, we had a nice little setup that came in at 9:30, came back and grabbed that 50% level. Right now, the 50 isn't really anywhere great. Actually, let me adjust this forward a little bit from that previous level. Yeah, I'd
Well,
say right now,
that's the
44.
S&P, right? Yeah. It's the S&P.
Yeah.
Sorry.
Um, we have that with that breakthrough, and again, you can see there's one little trade set up there already. Break of 44.3775. That was one of the ones we gave you last week when we broke through that level. It ended up being good, and again, we know there's some sellers there if it was able to kind of push that down. That also coincides with the 50. If you take the high, again, the last kind of higher high basically when the downtrend started, we do the draw from there to the overnight low. That puts us right about that same level, that 44.37 level. If we can get up to there, I don't know if we will. Maybe if we can rally up a little bit for the open, that'll give us the opportunity to kind of get back up there. That could be something to watch out for. NQ. It missed its 50% retracement by a little bit as well. Let's go ahead and readjust this and see what we have. We'll put it to here. Yeah, the 50 here, there's a level there. I don't necessarily love the level. I don't think this one is giving us as much opportunity, unfortunately. I don't need this one either. Let me just delete some of these alerts. Slice through, pulled back. So let's pull that. Yeah, NQ is not as good looking right now. Let's see if I do the full top to bottom. What do we got? Yeah, it's a little bit better. It's a little bit deep on that one. So again, if you guys are marking some levels in there, again, this is sitting on the 50%. We can drop this in and let's see, price label, put it right there, 14,550. 75. YM looks like it's the close to the strongest. And again, it's up in a level right now with some sellers. So again, this one did come back up and tag that 50. Futures traders would have got stopped out, or if they use the 50 as the entry in the 61. Again, nice completion of that one on Friday. Let's see where we are here. 50% for that is nothing. Yeah, 50 here. Let's drop this down to 15-minute. Yeah, you can see that there's a little bit of chopping around in this level right here. And again, that also coincides with the 50. It's just sitting just a little bit higher. And it's a very similar trade. I would say right now, this is the strongest. Russell's just a little bit stronger right now. But as far as the big three, I would say this one's a little bit more there. But you can see it pulled back before all the Bullard news. You can see that we had sellers pushing it. Nice push down, came up and touched it. Bullard spoke, and now it's pushing back lower. So I would say with the raises, although the Russell is the strongest right now, I think it has every reason to be the weakest. So I don't know if this is some pre-positioning or what, but again, he may say something else on here. I'm sorry, it's YM. Let's go to Russell and see what we got. Yeah, Russell's up in kind of the same thing. Let's see. Let's pull it from this level. Yeah, you can see Russell came up to the 50 this morning, and again, it was kind of sitting right there, and it's already kind of pushed back down again. I think right now it is strange that Russell is the strongest. It's only up 0.08, so it's again less than 0.1%. A little bit stronger than its other siblings, but again, interest rate rises are going to hurt the Russell the most. It could be pre-positioning for a nice short day. But with the VIX up right now, again, you can see that the VIX is trying to creep back down, but my VIX is a little bit delayed, and Bullard just came out with some of those headlines, and I think those headlines will keep. I think they will keep rolling through. I don't know how long his interview is, but people will start dissecting those, and that's it for the day. And then we have President ECB president speaking at 11:15 today, and again, obviously going to mess in the rest of the situation.
Yeah. Here, did you want to pull up the oil chart and jump into that?
Sure, I can. Yeah, I
Yeah.
mean, oil's coming off a 50% retracement right now. If you go from your Friday low from the last kind of established trend higher, we did miss 95. It came up and missed it within like 13 cents. In doing that retracement, you can see that we had kind of this big explosion move right here, and that's what it bounced off of at 8 o'clock this morning. So it is actually pushing up higher. If you're not already long, it's probably a little bit late to get into it already. The 1 to 3 is sitting right there. Which is decent. You can see that's right around where the next area of kind of sellers are sitting right there. I'm not necessarily interested in taking that as a short to the downside. Like you said, you know, with him, with Bullard saying the GDP is looking to be the 3.5 or above this year, even with all the rate hikes out there, that's showing that the economy is doing quite well. The recovery is going, quite well. I don't see something world peace happening in Russia saying, "Hey, you know what? Because we were jerks, everybody here's free oil." That's not going to happen. So I think every factor out there is still for this to continue to go higher. Hate to say it because I don't like oil any higher than this, but yeah, I mean the estimates, at the end of year estimates, we're calling for $96 to $104. We're already at 95, and we're only 2 weeks into February. So those predictions, they may be adjusting those predictions even higher. You saw what, a 120 or a 140?
Yeah, well, yeah. Someone was calling for 120.
Yeah, 120. So
Hey,
even if we just did $5 a month, we're still hitting that by June. So
yeah,
I think there's more upside on this one, but yeah, it's already rallying. And again, with the U.S. trader coming online, seeing those good statements, you know, saying that we're raising interest rates isn't going to affect oil. It shouldn't affect oil that much because, yeah, that hurts companies a little bit, but it means that we have robust growth to justify that, which means more demand on oil. So,
yep. All right, there we have it. Kind of I want to say it's not entirely a quiet start to the week. We do have some things going on. Uh, so yeah, we're gonna have to keep paying attention to any news coming out of the Fed on how they're going to be handling inflation. Bullard talking today certainly throw some rocks into the markets a little bit, and then you've got the geopolitical concerns. How is the world going to respond, and are we going to be able to back off a war in Europe between Russia and the Ukraine and all of the fallout from that? And that's sort of weighing on things as well. That's what we've got for today. Any questions for Nadex, please email us customerservice@nadex.com. You can also reach out to me. There's my email address, and Brian is also accessible. Please feel free to reach out to Brian if you've got any questions. You can email Brian at support@keeptradingsimple.com. We will be back tomorrow morning. Let's see how the markets ultimately react to Bullard's statement, and maybe we are coming closer to some diplomatic solutions to what's going on in Eastern Europe. We'll see how that ultimately plays out as well. Happy Valentine's Day. Hope everyone enjoys their day. It's a great way to start the week, and we will catch you tomorrow. Good luck in the markets.